The Bitcoin bottom is in. As I've been telling you guys, we have a range over here, guys. What people were forgetting is that we have been seeing a huge deviation of the range low that was being followed up by a reclaim of that range low after we swept massive sells and liquidity beneath the low over here. Now I told you guys, as long as the range low afterwards holds, we should expect higher prices. And that is exactly what happened. Bitcoin retested the range low in confluence with this breaker block over here. It made a local sweep of the low over here, right? And then maybe a lot of people were probably targeting this low to take profit on their shorts. But we knew that as long as the range low holds, we should never ever be bearish on Bitcoin. That is exactly what played out well. We hold the range low and we expanded higher. Now I think that the bottom is in over here because the local trend over here has shifted back towards the upside. So to look for longs on Bitcoin is pretty simple in my opinion. Let's say that we are counting the Elliott waves, and let's say we are starting a new impulsive structure. Then we know that we should count 5 waves. Let's say that this was wave 1. Wave 2 has now finished and we are in the middle of wave 3, wave 4 and wave 5. We know that wave 3 is usually the most impulsive one and that wave 3 consists out of 5 subwaves. So let's measure the target for wave 3 with a trend-based Fib extension. We go from the low to the high, back to the higher low, and what can we see? That the 1.618 and the 1-to-1, but especially the 1.618, which is the main target for wave 3, exactly aligns around the range high. Is that a coincidence? I don't think so. Is it a coincidence that the 1-to-1 Fib over here exactly aligns inside of this huge imbalanced move? I don't think so. So those are my main two targets right now for Bitcoin, the 1-to-1 and the 1.618. Afterwards, we are probably going into a wave 4. So it makes sense to get another push towards the 1-to-1 or maybe even towards the 1.618 and start a bigger consolidation area for wave 4 afterwards. Now, how can we anticipate this? Let's say that we have a break of structure over here, right? We broke through the significant high, we opened and closed multiple candles above. Now, if we're going to go to the lower time frame and look for potential execution, what can we see? Is that we have a previous supply area that failed to hold a supply over here for the price of Bitcoin, but I think many people are going to be looking at this area over here. So instead, what I would prefer to do is maybe anticipate a pullback towards this supply area over here and maybe even extend it a little lower to this one, because this entire supply block, which should now be turning into demand, and this is very well visible on the 4-hourly time frame, has also been acting as resistance over here for the price of Bitcoin once and twice. Now, what can we see besides the fact that it was acting as resistance? We can also see that the 4-hour EMAs, the 200 EMA and the 100 EMA on the 4-hourly time frame over here are exactly aligning with that breaker block. On a 2-hourly time frame, we can see that the EMAs are slowly starting to align with the breaker block as well. And then on the 1-hourly time frame, also the EMAs are slowly starting to align with that breaker block as well. So what does it make sense? It makes sense to start looking for longs at the top of this breaker potentially, which also aligns with this bullish fair value gap over here on the 4-hourly time frame, where we have this very beautiful bullish fair value gap and a flat hour 4 candle over here. Start looking for longs right there. We have a very clean invalidation beneath the low of wave 2 over here, right? And then we have as a target our range high, and now this offers a beautiful swing trade of approximately 2.19. Now let's say we continue down lower, it means that we can start looking for longs lower down as well and add to that position, same target, same invalidation, but only a little bit better of an RR. So I think that the Bitcoin bottom is in. Just like I told you on Twitch 2 weeks ago that this sweep over here was a very bullish sweep and it could result in a potential bottom, which exactly resulted in a potential bottom over here. Okay, I told you guys not to short the range low. Did I long Bitcoin? Full transparency? No. Why? Very simple. Because I told you guys that I'm looking for longs on altcoins. And right now I'm going to show you guys 2 potential setups on Ethereum and on my favorite altcoin at the minute. When we look at Ethereum, we can still see that Ethereum is trading in this valid falling wedge pattern. Okay, I've explained to you guys many times why this is a valid falling wedge. First of all, look at the amount of taps that we have seen of the higher trend line, and look at the amount of taps that we have seen of the lower trend line. Now, also more importantly, besides these steps, when we look at the volume, we can see that the volume was dropping lower and lower. But this is not important, because instead of trading the breakout, we are going to anticipate a breakout. And now I told you guys on Monday's YouTube video that the bottom for Ethereum was potentially in. And why did I tell you that? Because so many people, as I told you on Monday's video, were looking for a sweep, were looking for a sweep of this low over here to take profit on their shorts, right? And on other exchanges, this wick over here is slightly lower over here as well. And many people were looking to take profit on the shorts right there, which is why I told you there was a possibility that we were simply going to form another higher low over here, front run and take profit targets on those shorts and expand higher from there. Now, what have we seen? We have seen, if we go to the 1 hourly time frame, a break of structure over here. The break of structure on the 1 hourly time frame wasn't enough for a reversal. Why? Because the daily and 4 hour trend were still to the downside. So what happened afterwards? We saw a liquidity sweep of the low over here. So the people that longed because of our one break of structure, even though the bigger trend is to the downside over here and put their stop loss over here, they got wrecked. Afterwards, this is where shit starts to become interesting. We get a valid break of structure on exactly the 1 hourly time frame, but not only on the 1 hourly time frame, also on a 4 hourly time frame. Look at this break of structure. Now, by front running the take profit targets of those shorts over here and getting a break of structure over here on the 4 hourly time frame, I think that there's a decent possibility that the bottom on Ethereum might be in right here. Okay, so what can we do? We can start looking for longs. Now, if we switch on this mid time frame range over here, next to the market structure and the liquidity that is currently in our favor, what can we see? We can see that we have reclaimed a very pivotal quarterly level after tapping into the range low once and twice and holding on to that range low. So we form a range low over here, we form a range high over here, right? We deviate beneath the range low, we shift structure over here, range low holds. Where should we push towards next according to our range trading strategy? Towards the mid-range and towards the range high. Now, if we are going to push towards the range high, what is the price going to do? It's going to break out of this massive falling wedge. But instead of trading a breakout, we want to anticipate a breakout. So that means that we have our market structure shift, we have our bullish liquidity sweep, we have our tap into the range low. What can we do next? We can start looking for longs upon the pullback. For Ethereum, we have a breaker block over here. But do not forget that many people are looking to trade that breaker block. What do I prefer to do is to go onto the 4 hourly time frame over here. And what can we see? We can see that we have this bullish hour 4 fair value gap over here that exactly aligns with the top of the breaker block, the hour 4 level over here. Now this is an area where I'm interested in potential longs. What can we also see is that the price displaced above this previous hour 4 bearish fair value gap. So we have this inversion that aligns with that area as well. And that is some very, very nice confluence. So where would I start looking for longs? I would start looking for longs up on the sweep into that hour 4 bullish fair value gap where we have the top of that hour 4 breaker, stop beneath the local low. I'm going to switch on the nice color over here. Then we can target a breakout of the falling wedge. Now, when we target a breakout of the falling wedge all the way towards new yearly highs, we are looking at a massive RR trade of 10.93. Now that means that maybe we shouldn't even wait for such deep of a pullback. Maybe we should be a little bit more aggressive because the RR is so high already. Do we really want to have the fear of missing out right here? I don't know, and that is something you have to determine for yourself. Maybe on the lower time frame we can already higher our entry a little bit and then use multiple entries. So maybe a first entry a little bit higher, a little bit more aggressive, and a second entry over here, same invalidation, same target, and then maybe a third entry even lower to DCA into our swing long as it offers a deeper pullback. So if it offers a deeper pullback, we might even add more size to it. What is important is that we always know what we lose once our stop loss gets hit. That's how you determine your risk, and that risk when your stop loss gets hit should not be bigger than risking 2, maybe sometimes 2.5% of your total trading account. I prefer to risk 1 to 1.5%, but you should never risk more than 2 or 2.5% on your trades. Now let's move over to the last chart, which is the Fed chart, which is a beautiful chart with over here a higher time frame range, but not only over here a higher time frame range, we can also see that over here, guys, is where we have a mid time frame range inside of that higher time frame range. And now what can we see when we look at these two ranges? We can see that we have seen a beautiful deviation over here. The deviation mitigated a very important sell side liquidity pool over here, and after that mitigation of the sell side liquidity pool, we saw a local liquidity sweep over here. When we go onto the lower time frame, we get another local bullish liquidity sweep over here, and that local bullish liquidity sweep results into a strong push towards the upside that eventually on the 4-hourly time frame gave us a break and hold above this very significant high over here. And now this chart has some beautiful confluences, because besides these ranges where we reclaim the mid-range of the mid-time frame range, right, and where we reclaim the range low of that higher time frame range, we can also see that once we switch on the fixed range volume profile of this entire range, what can we see? We can see that we also reclaim the value area low of this higher time frame range for Fed. And now that is no coincidence, because we know after a deviation of the value area low, which is what we call a failed auction, the price should move towards indeed the value area high. So what are we looking at on Fed? We are not only looking at range deviations right now of two pivotal range levels, we are also looking at a deviation of the value area low, which should also result into a push towards higher targets. Now we have the break of structure as well, so market structure is in our favor. The daily and weekly trend are still trending towards the upside on Fed, and besides that, guys, we have also mitigated a very important sell side liquidity pool, and look at all of the liquidity that is resting towards the upside above all of these highs over here on Fed. There's so much liquidity resting towards the upside, so much buy side liquidity that we can target on Fed as well, which means that we have our triggers, and right now we start looking at an execution for a long setup on Fed. Now for that execution, we look at a lower time frame. What can we see over here, guys, is that we have this top of the breaker over here, and look how the top of this supply area, so we had this supply that led to that impulse to the downside, right, to this impulse to the downside. Look how that supply acted as perfect resistance over here. Price wicked into it and formed a lower low, but look how the price exactly rejected at the top of those bodies over here. And that is why I always like to use the bodies instead of the wicks for my supply and demand areas. All right, now what can we see? If we remove the supply and we just keep the top of that supply, is that it acted exactly as resistance. In the meantime, as always, my coffee machine is going crazy in the back and washing itself. But we can also see that the top of this supply, which should now be turning into demand, the top of this breaker block, aligns with this bullish fair value gap over here on the 4-hourly time frame, and it also aligns pretty closely with the mid-range over here, and right beneath it is where we have the range low. So it might make up for a very nice first entry point for Fed. Stop beneath the local low, and what do we target? We target a brand new all-time high for Fed, but instead of targeting the all-time high, we are smart traders and we always take profit at the second to highest high instead of at the highest high, and that already offers a beautiful RR of 4.12. Now you guys know that I always work with 2 or 3 entry points. I am already swing long on Fed since lower levels, but this is definitely a beautiful potential setup. Also, when we look at the EMAs on the 4-hourly time frame, what can we see? Flipped the EMA class on the 4-hourly time frame, and that now exactly aligns with our area of interest. When we look at the EMA class on the 2-hourly time frame, we flipped it and it exactly aligns with our area of interest. And look at the EMA class on the 1-hourly time frame, guys. We flipped it and it exactly aligns with our area of interest. Flipped so many EMAs, flipped market structure. Price has been mitigating sell-side liquidity pools on Bitcoin, Ethereum and altcoins. Price has been holding the range lows on Bitcoin, Ethereum and altcoins. I think that the bottom is in. I know that's a bold statement to make, but I'm gonna stay true to my system. My system is now giving me the triggers that the bottom is in. I am already long on Fed and on NEAR. Both are currently in amazing profits, especially the NEAR long trade, guys. It's an insane trade that you guys can follow on Twitter. Share it in the Discord server, of course. And I will be looking for more longs either today, either tomorrow, or otherwise early next week. I want to thank you guys for watching. If you guys did enjoy today's YouTube video, make sure to smash the like button. Make sure to subscribe to our YouTube channel. And I'll catch you guys on Monday's video. Ciao, ciao.